The stock of the day. Look, a number of companies updating the market today, particularly with quarterlies, but we're going to look at Reliance Worldwide, and it has reaffirmed its 2026 fiscal year earnings outlook, reporting stable trading conditions despite the ongoing US tariff changes. The company's saying 9 months of trading to the end of March showed no material change to guidance issued in February, including expectations for earnings, cash flow and capex. It expects the FY26 tariff impact to come in at the lower end of its $25 to $30 million range, with FY27 estimates unchanged at $5 to $7 million. And it says it has no direct exposure to the Middle East conflict. So, what do our experts think? Well, and I guess this is obviously linked to what we're seeing more broadly with the economy. That's going to affect this stock more broadly, particularly a focus there on its exposure in the US. And Michael, given we're talking about dividend yields today, I think it's got 2.2% is the yield for Reliance, so it's not certainly not a standout, is it?
No, and it's a business that hasn't really been growing the dividends greatly in recent years either. It's peaked probably 2 years ago, and it's been a pretty challenging 2 years. Obviously, tariffs being one factor there, but also a fairly soft US housing market and construction market over there. And that housing recovery, though, is showing signs of bottoming and potentially picking up again, which will ultimately be beneficial for Reliance Worldwide. That's sort of what you're getting exposure to when you do buy this company. The business says they have no direct exposure to the Middle East conflict, and that certainly might be true in terms of the markets in which they operate, but oil-driven input costs are significant when you think about resin, freight, energy costs, those kind of things. And at the moment, they're being passed through into final pricing, but you can only get away with that, I think, for so long until there's an impact on demand. You can't just keep increasing prices indefinitely. So at the moment, so far so good on that front. Had a very soft update probably at the beginning of the year, but I think the market's probably feeling confident or more comfortable now that things haven't deteriorated further. So although things are stabilising, they remain subdued. And for that reason, we would probably want to wait and see, that the ongoing turnaround in the US housing market and construction market is ongoing. And you'd obviously, ideally, want to see an end to the conflict in Iran just to make sure that some of those input costs don't continue to rise or stay too high for too long.
So you'd hold it?
Hold for now. I think it's reasonable value at these prices, and is a pretty good quality business with a long track history of delivering, but at the moment the conditions aren't in its favour.
Just go.
Yeah, look, we're the same. We're a hold on the stock. It's trading on about 14, 15 times earnings. So it's not, it's probably fair value at these levels. If you look at that long-term chart that was up on the screen, you can see that it is a cyclical stock. So it goes through cycles. And you'd probably allude to that you're probably looking at the bottom of the cycle at the moment. When does that turn? I'd probably be a little bit patient, as Michael suggested, to see how things turn around in North America, which is a big part of their earnings. The dividend yield, look, 2 to 2.5% dividend yield with zero franking is not that exciting, particularly if we're looking at income for investors. But it does have a fairly conservative payout ratio, which means if they increase the payout ratio, that yield would be more attractive. So, payouts is under 40%. So, but they do utilise buybacks. So if you're looking at total returns, that sort of gives a bit of leverage to the upside when they are buying back. So look, we're a hold. It's got some good, strong brands within it. It's all about plumbing products and water control. So it is leveraged to the construction industry and again skewed towards the North American market. So yes, while they're not directly impacted by Iran, as Michael suggested, oil prices affect movement of goods and input costs. So it has an impact. I'd be a bit patient. I think if the cycle does turn on it, it's probably a good growth story, but not at this stage, not yet.
Double hold then for our stock of the day, Reliance Worldwide.